Welcome back. Markets are higher now. Take a look. A pretty good reversal underway. Dow Industrials had been negative when we started the show. Now we're higher, but just by a fraction. Investors are waiting on these U.S.-China trade talks. High-level negotiations between the two sides taking place in Washington today. Joining us right now is Mainstay Capital Management CEO and Chief Investment Strategist David Kudla. David, it's always a pleasure. Thanks for joining us.
Good morning, Maria.
How closely are you watching this to see what comes out of this for a trade deal, or are you even expecting a deal from the two nations in terms of your direction in allocating capital?
Over the past 24 hours, it seems as though you almost have to watch it minute by minute if you're trying to determine how the trade talks, the 13th round of trade talks that are happening today, although the deputy ministers have already been meeting and talking ahead of trade talks today about what some of the background issues are going to be discussed, and we've already had some news about that. But it is important to the markets. It's important to our investment strategy. If you look at what the Fed is, one of the reasons they cited for the two Fed rate cuts that they've already made, it's about slowing global growth. It's about muted inflation. The other is about trade uncertainty. If you look at one of the round of tariffs that's coming later this year in December, it was delayed from September 1st to December 15th, and it's $155 billion on consumer goods that was delayed on purpose for that reason. And, you know, one thing that has been a positive for this economy is the consumer. 2/3 of our economy is based on consumption, and when these tariffs start to directly impact the consumer, that has more of an impact on our economy. So, you know, what is happening in these trade talks? It's important to what the Fed is doing. It's important to what our economy is doing, and certainly it has to be important for anyone out there managing money to pay close attention to and how they're developing their investment strategy going forward.
David, it's Veronica from the Wall Street Journal. What kind of trade deal would we need to see a pickup in business investment spending?
Well, the thing that has been critical for businesses going forward, and you know, markets hate uncertainty, and really business owners hate uncertainty. They've been unable to plan, not knowing what trade policy or what the picture looks like. It's been very difficult. Obviously, there are companies out there who've built their entire business model around the kind of trade that's been available to them in the way that it's been more unrestricted in years past, and that's been changing very much over the last year and a half. And they don't know how much more it's going to change. So it's a matter of where they source how they source materials coming in that they're using in their manufacturing operations, they're using for input into their products, and where they export. So that uncertainty is impacting business spending. Another thing that the Fed is looking at and is impacting our economy is on the manufacturing side, export side, and for business spending and uncertainty. So that becomes very important as well.
David, hi, James Freeman here. I'm wondering, obviously, we looked at the recent history here, and I think the markets are likely to rally on any kind of deal where tariffs come down, peace reigns again. But I'm wondering on the intellectual property piece, if the president gets some kind of commitment there, do you think that boosts IP-based companies, software, semiconductors, et cetera, or is it going to be kind of a wait and see, and we'll see if they actually mean it?
Well, and I don't know that I completely answered Veronica's question. I think for Veronica's question, the deal, if they got a deal that suspended the tariffs that were yet to come on October 15th and December 15th, that would obviously be a benefit to the markets and for businesses planning ahead. You know, what's off the table right now is the important issues to the U.S., intellectual property, subsidies for Chinese industry, some of these broader or more important issues from a security standpoint that the U.S. is concerned about. the China wanting to narrow this down to a much more muted or much smaller package for now, which would be beneficial for business spending for the markets. Even if that deal got signed, that would be a step forward.
Isn't that a victory for China, though? I mean, isn't that a victory for China, though, David? I mean, you know, this administration has spent a lot of time explaining the issues, from intellectual property theft to even fentanyl coming into the country. If he just gives on those things, because that's exactly what China does, doesn't it look like a loss for this administration? I don't know how the market would react to that midterm. I mean, I know that maybe that would be a positive over the short term. Maybe it causes a knee-jerk rally. But I think soon into it, markets would recognize that the U.S. didn't get a very good deal.
Yeah, and Maria, as you said, very well said and accurately said earlier this week, some of which they're agreeing to buy are things that they desperately need anyway. Right? These agricultural products are things that they desperatly need anyway. So it's really just fulfilling a need for their country.
Like pork. Given the swine flu that they've got there, they need pork, they need soybeans. Real quick, David, before you go, the Fed released the minutes from September meeting yesterday. The central bank obviously approved that quarter-point rate cut. Anything you want to say in terms of how you're allocating capital right now in the face of all of this? Yeah,
well, so we're still constructive on the markets. We have increased our hedges we have in place, like REITs, gold, long-duration bonds, those all benefiting from the Fed cutting rates. We had the cut in July and the cut in September. We expect another one in October.
David, it's good to see you this morning. Thanks so much.
Thank you.
David Kudla joining us.